I'm Charlotte McLeod with the Investing News Network, and here today with me is Rick Rule, proprietor at Rule Investment Media. Thank you so much for joining me today, although really I would say I'm joining you because we're here at your conference.
Well, I was going to say thank you for coming down to Florida. We're delighted to have you.
Yeah, definitely a change from Vancouver. And to start out, and we're going to go with an easy question. I wondered, you've gathered, as usual, a group of very smart people here to help us understand what's going on in the markets. What is your most interesting or important takeaway so far from the event?
I guess there has to be two. I guess the first is that for many people, the financial world doesn't appear to make sense. And the reason for that is because it doesn't make sense. We're in a world where narrative has prevailed over arithmetic, and I suspect we're due for a reckoning. The idea, as an example, that aggregate government debt can be repaid is a non-starter. The idea that negative real interest rates are a function of nature rather than a function of fraud, people don't understand because it's not understandable. The second realization is that despite the economic reckoning, certain asset classes and certain countries are oversold. So despite the fact that there's a lot of bad news, there's some good news too with regards to valuation. So I would say that the conference reinforces both themes. There are, as an example, exploration companies that are enjoying successful efforts in exploration who have more cash in the treasury than they have market capitalization. So you get the exploration upside for free. These are odd times and interesting times.
Yes, okay, I'm glad you said that because I've definitely been feeling like I don't understand, but if everybody is feeling that way, I feel a little bit better. I think that one of the things I've been saying to people is this is coming at a really good time, and I don't know if it was intentional or not, but we had yesterday the latest Fed meeting. We got our increase of 75 basis points. I know that we have talked about the Fed a lot and the path forward, but just because we had this meeting, I want to get your updated thoughts on what could be coming.
Well, certainly in the very near term, the Fed raising interest rates, how do I say this? It's good for society. The idea that interest rates are negative means that society is organized to subsidize spenders at the expense of savers. Societies do not get wealthy by spending more than they save. The gradual normalization of interest rates, if that's what's happening, is something that begins to address the unfortunate imbalance between saving and spending. From the policymakers' point of view, the increase in interest rates gives them the ability to cut them later when they need them. And I suspect that that's important. The near-term impact of it, obviously a higher cost of capital, in theory, lowers profit margins as a consequence of the cost of capital, while at the same time devaluing the net present value of a dividend stream. So it's probably negative for equity prices in the near term. My suspicion is too that if the economy doesn't hold together as a consequence of higher interest rates, that you're going to see the Fed back off very, very aggressively. If that happens, it'll be a very interesting circumstance across the economic spectrum. And by the way, if that were to happen, probably very good for gold.
Right. So, and the other thing out of this Fed meeting, or really the press conference afterwards, was this recession question. We had Powell telling us ultimately, no, he doesn't think that we're in one. We had the GDP numbers today that say otherwise, according to at least one of the definitions there. I know that we talked about recession last time and you made a joke about it. You said, you know, you've called many that did not actually come to pass. But I want to ask you about this difficulty that we seem to be having with defining it.
That's political. A recession, well, first of all, a recession is normal. What happens is that you have economic cycles. You go from hard times to saving, to investing, to good times. From good times you get confidence and profligacy, and the consequence of that is that you have bad times. It's the Austrian business cycle. It's actually a force of nature. When you get in the way of nature, you can alter things, but you don't ultimately change them. We've had, in effect, 40 benign years. I'm not trying to say that 2008 as an example wasn't a challenge, But we've had 40 benign years. We've had 40 years of recovery since the great inflation of the 1970s. We've had 40 years of declining interest rates. We've had 40 years of positive demographics. We've had 40 years that were mostly peaceful, where we mostly benefited from inclusion of women, inclusion of people from non-Western countries. 40 very, very, very benevolent years. Now I'm afraid, and I'm not a gloom and doomer, but I'm afraid there's going to have to be a bit of reckoning.
Right. Okay, and so this battle against inflation is going on. I noticed something interesting in the news, I think this past week. So in Zimbabwe, they have inflation as well, and they've introduced, I don't know if you read about this, they're selling now gold coins in an effort to battle against it. I wondered if this is this just a blip on the radar? Is this something we could start to see a little bit more of, because this is an issue in more countries around the world?
My gut feeling is no. My gut feeling is that someone goes into politics, somebody subjects themselves and their families to the indignity around politics, because the drive for power is so strong that they can't help themselves. A gold standard, a currency that isn't merely denominated in gold but is in fact backed by gold, is one that imposes a discipline on governments that governors feel is intolerable. If we had a gold standard, we wouldn't have any deficit finance. And I don't think there's any politician on the planet that wants to be constrained by reality. And by the way, I don't think there's any electorate on the planet, too, that doesn't want to be lied to and swindled.
Okay, that's kind of the answer that I thought we might get, but I feel like it's worth asking. So right now, we have kind of interesting times for gold. I know our videos, our content that we produce, when things are going poorly, it gets less attention, and we get comments from people who are so disappointed. And I know that you have told us many times in the past that you probably don't want to see a world where the gold price is super high. But I did want to ask you about the circumstances behind the lower gold price right now, just so people can understand that.
Well, Charlotte, you said a lot of things there.
Yes.
The first is that human nature is such that price levels justify narrative. So when the gold price is high, people believe in gold. That's ironic. When the gold price is low is when people are supposed to believe in gold. So the first thing that I've noticed as a sort of a specialist investor is that when my investment expertise is the most in demand, it has the least value. And when my investment expertise is of the most value, it's the least in demand. That's just the way the world works, which is all fine. The fact that people are disinterested in gold and disinterested in resources, I think, is a wonderful thing because they're on sale. Now, we'll get to the second part of your statement. My experience has been that the most important determinant of the gold price is the strength or weakness in the US dollar and real interest rates. When real interest rates or higher nominal interest rates drive the US dollar, gold does poorly. A circumstance like this, where the US dollar is very strong and gold is relatively strong, has only happened twice before in my career. And that's been very bullish for gold. My friend Doug Casey, and I think I've quoted this on your show before, my friend Doug Casey describes the US dollar as the worst currency in the world with the sole exception of everything else. The US dollar was also described once jocularly as the prettiest mare at the slaughterhouse. And I suspect that the strength that you see in the dollar is really not so much a function of the strength in the US economy, certainly not a function of the US government balance sheet, but rather a sign, of the comparative weakness of other currencies. In other words, the US dollar is doing well in a vacuum. It's doing well in a vacuum, too, that makes people feel confident because they've experienced mostly favorable outcomes in the last 40 years.
Right, yes, so definitely people are bringing out their dollar metaphors right now. That's the second time I've heard that one today. So we've been talking about gold and what's going on. I think that's important, but our audience loves it when we check in with you about uranium, which we've heard a lot from you about, but not for a while. So I wanted to check in with you on where you feel we are at in that cycle.
Back to solidly bullish. You know, the uranium prices I discussed 3 years ago when you and I talked, I said uranium was a no-brainer. I expected it to take longer than it did to bloom. Then, when it bloomed, at least the uranium juniors got way ahead of themselves. So although I was bullish on the material, I was bearish on the uranium stocks, simply because they got too far ahead of themselves. The material now is really, truly on the runway. I've been saying for years to anybody who'd listen that the most important near-term determinant of the price of uranium was the pace of Japanese restarts. Japanese public opinion in recent polls has gone from 21% favorable to 64% favorable. And the Prime Minister of Japan said that nuclear is an inescapable part of Japanese energy future, both because of carbon generation and also because of energy security. The consequence of that is that the necessary precondition for a higher uranium price, which is Japanese restarts, isn't something that's going to occur in the future. It's something that's happening right now.
Okay, so we have the Japanese restarts, and I know that's one that you always bring up with us. Are there any other catalysts that we should mention that people? I mean, there's many, but
well, what's interesting is you have people like Mr. Moore, former founder of Greenpeace, coming in saying that uranium is a green metal, that the only chance we have for sustaining the material future of humankind without carbon generation is nuclear. The idea that for once in my life I'm politically correct is amusing to me, if not ironic. There's a realization in the world that the only chance that the world has of maintaining our material standard of living and increasing the distribution of our material standard of living across more and more people, empowering more and more poor people. The only way that we can do that and minimize carbon loadings is nuclear. It's the only chance we get. What's interesting to me, I mean, this has been true for 20 years, but it's coming to be more widely realized, which is interesting to me. Even the institutional forces that are anti-wealth, anti-growth, anti-human, I'm talking about people as an example like Joe Biden, have, because of the swing in politics, had to become pro-nuclear.
Okay, very interesting. So shifting topics again as we get to the end here, I was watching one of your recent interviews elsewhere, and you're talking about companies now are calling you up, trying to do deals. And I was thinking to myself, it's like, don't they, you would think that probably everybody wants to be associated with you, but that is probably too reductive. So I wanted to ask about doing deals with these companies and what would make it, creating that balance between something that is good for you, but also good for them. And I'm asking this question basically to help investors hopefully understand, what companies should be doing to arrange these well for themselves.
I have always required not a great deal, but a good deal. Companies' near-term job is to lower their cost of capital. So in circumstances that existed 2 years ago or 3 years ago, when there was lots of money in the sector, companies were probably well advised not to come to me. There was lots of dumb money around. And if you're competing with dumb money, you're dumber money. Now we have a circumstance where many of these companies played chicken with equity markets. They thought that the stocks were going to go up, so they could issue less stock to raise the money, but the stocks went down and they still need the money. In the absence of any other money, I'm very good money. What many companies have come to understand over years is that there's a coterie of investors who invest over 5 years and bring more than money. I have the ability and frankly the willingness to talk to 80,000 people at a clip on my own channel. And because I'm no longer regulated, because I don't get commissions, because I'm not a stockbroker, if I buy something, I can tell my people why I bought it, I'm not getting a commission, and why they should or should not buy it. I like a circumstance in the market where I bring more than money. I'm one of the few people in the world who is willing to lend money to companies that are even in the exploration stage. I'm willing to lend money for people to do catalytic conversions, a preliminary economic assessment, a pre-feasibility study, a bankable feasibility study. I'm one of the few people in the world that understand the collateral well enough that I can be a lender to pre-revenue companies. I'm the kind of person who, when there is no popular support for a stock, but I have a sense of who the people are and what the value is, where I am willing, first of all, to write a check myself, but I'm also willing to mobilize capital for that company, and I'm willing to do it for no commission. So for the right company, and there aren't many of those, I would argue that I'm a superb investor. I'm particularly a superb investor in times like these where there's no liquidity and no popular support.
Okay, well, thanks for going through that with us. I think we can wrap up just about now, unless you had any final thoughts that you wanted to share during these very interesting times.
I think we're in a circumstance now, when we talked last time, Charlotte, what I was saying was that the juxtaposition between risk and reward favored larger, safer companies, that the speculative premiums that the smaller companies had in place were obviating their value. And I urged people to be in names like ExxonMobil, Franco-Nevada, names like that. There's been a collapse among the juniors, and the collapse has taken place without any regard to quality. Now we're in a place where those people who have experience in the sector have to go up the risk spectrum. There are companies now that have good exploration programs where they have success, they have good people, and they have negative enterprise value. They have more cash in the treasury than they have market capitalization. You get the expertise and you get the properties for free. I love stuff like this. I think the second thing is that we're in a risk-on environment, which is to say that people are afraid of taking risk. And what you need to do is find very good people and very good projects that tick a bunch of risk boxes. People are afraid to invest outside the United States and Canada, so I need to invest outside the United States and Canada. People are afraid to take exploration risk, so I need to take exploration risk. People are afraid of uncertain time frames, so I need to embrace uncertain time frames. Wherever the competitive money isn't, is where I have to be, as long as I have people who I know and love and trust and good assets.
Okay, I think that's a great note to end on. I know that advice is hard for people to follow, but it's what we always get. So fingers crossed that some people can act on, that contrarian mindset. Okay, and once again, I'm Charlotte McLeod with the Investing News Network, and this is Rick Rule.